So I'd like to start at the beginning of your career.
By 2024, you had the economy growing at 2.5%. You had inflation in the 2 plus a few tenths on a 12-month basis by the end of the year. And you had the employment market. You still had the labor market at essentially full employment. So I would call that a soft landing. We had it there. Then since then, we've had to face a much smaller source of inflation, which is the tariff inflation is visible, and we think it's really just a one-time price increase. That's been our thinking since the beginning. Right now, we think it's adding somewhere between 0.5 and a full percentage point to inflation, but that's a much smaller thing than we saw during the pandemic inflation. And and of course now we're facing events in the Middle East which will certainly affect gas prices, and we feel like our policy is in a good place for us to wait and see how that turns out. Sure. So you start with what you said. Also, in the current situation, you have to be mindful of the whole broader context. And the broader context is we're still, we've been coming down close to 2% post-pandemic, but we've never actually, gotten right and stayed at 2%. So it's been a while. And we're very mindful of that fact. Inflation expectations do appear to be well anchored beyond the short term. But nonetheless, it's something as we will eventually maybe face the question of what to do here. We're not really facing it yet because we don't know what the economic effects will be. But we'll certainly be mindful of that broader context when we make that decision.
Great.
As chair, the whole idea is to be non-political and not, never working for or against any political party or individual, or never even considering things like that. So,
and AI sits as this remarkable technological transformation.
The Fed's not a perfect institution. Don't look for perfection. What we do is very challenging and highly uncertain. But it's a great American institution, and I'm very proud to work with the people I work with. They're extraordinary right across the board, an incredible group of people, and I'll just close by saying it's very hard to build great democratic institutions and much easier to bring them down. The profession thought that monetary quantities and inflation were tightly linked, and of course you mentioned private credit. So private credit is something, as you guys are probably following, it's a relatively small part of a very large asset pool. We're watching it super carefully, as everyone is. We're talking to the people in the industry and investors and everything. I think we understand it. We're monitoring it. For looking for things that might lead to greater contagion or greater losses or connections to the banking system. And we're going to do that. You're not going to hear people say, oh, there's no problem here, because that's a jinx. But nonetheless, it's something that we're following very carefully.
Regrets in your time as well. Then anyone who wants to is welcome to join us on the stage.
For more such videos, subscribe to the NewsX YouTube channel, hit the bell icon.